Hi folks, this is the extended SPY report for Thursday, June the 27th. My goodness, the week is over, the month is over. It's just amazing. Let's take a look at this. Now, when we gap up, we do expect a partial gap fill, and wouldn't you know it, look at what we got. Partial gap fill, right? Came in about 50%. Let's take a look at this. Folks, the market is really very straightforward if we are always looking for the right things. Of course, that's the catch, isn't it? What am I looking for? Am I looking for the right things? And really, for us to look for the right things, what we have to do is actually know how the market moves. And truthfully, many of us have a real difficulty with that. But notice this. Here's the gap. Up into the space here. There's a wick. What do we have? The partial gap fill. Notice from today's commentary on the blog, it says the natural trade will be the partial gap fill. Partial gap fill is anywhere from 38.2 to 61.8. This one looks a little bit like the 50% gap fill event. And then we moved up into the specific levels. Today, I said above 159.20. or at the bounce off 158.20, which we never got to, right? And take a look at this. The bounce off 159.20. We can take a long into 159.52, 159.85, and 60.50. Look at what we did. Came into 60, what's the high? 60.50. How beautiful is that? Wow. Gorgeous. Hey, listen, these levels work, right? So when I give them to you, use them, and you'll be in great shape. All right. Now, what are we looking at for tomorrow? Now, tomorrow's going to be pretty interesting because it's been a while since we've had more than 2 days in a row doing the same thing in the market. Because the market is schizophrenic. And certainly, nobody ever wants to make things easy for us to make money. So we have to think about a couple of things. One, we're sitting in between the 50 and the 200 on the 15-minute chart, but if we back out to the hourly chart, we're going to see that what we've done is come up to test the 50 on the hourly chart. We've also come up into this relative congestion space right here. So this is a natural reversal space for the chart. Will we do it? I don't know, but I will tell you this. If we lose 159.85, we are going to have shorting action, and we're just going to back straight down into these spaces, 159.25 and then 158.60. That's why a lot of these levels, we say to ourselves, gosh, didn't I just hear that the other day? What? Yeah, you're going to see the same things, hear the same things over and over again because we are in a very sideways, difficult space to trade. Although intraday, things look very lovely, particularly if you know how to read the SMI, right? And we do. So the days in the trading room have actually been quite entertaining. Although, you know, there are some times during the day where we feel like we're looking at paint dry. When things do move, we know exactly where they're going to go. And this upside move telegraphed all day. We were able to stay long all day, right? Because we knew that it was going to bounce off of that level and continue. Now, let's say we move to the upside. What's the trade? Well, above the high, 160.52, or if we come back into this level and pop, right? If we pull back from that 159.25 area and begin to pop, then we can make ourselves traction up again into 159.85. Notice how these things are the same on the long and the short side. When I give you levels to tell you what to do in the event of either direction, your mind's got to be flexible enough to go, hey, listen, if it's moving in this direction, I better be short. And if it changes direction, I better be long. It's as simple as that. Don't get fixated on I've got to be long or short. Okay? Just go with the flow and move with the rhythm, and the rhythm is always on tap if we find the price point and it confirms. And it confirms being a very, very important statement there. All right, so if indeed we pop up above this 160.50, the next step is going to be 161.32. Easy as pie. And then the weekly pivot, which is 160.175. Here's what happens though. If we get to 160.175, guess where we are? In between the 50 and the 200. Could it pull back here, hold a little bit, and then go up here? The second we start telegraphing inside of the region between the 50 and the 200, we are going to have ourselves some choppy action, and if it holds, we will eventually test these higher levels. Listen, today looked particularly bullish. It really did. Here's the thing. These couple of days here look pretty bearish also. So we can't look at something and go, wow, you know, that looks really good. We don't know. We have no idea. Somebody might know. I sure don't. I seriously have no clue about what the market is going to be doing in the long order, but I can tell you in the short order, we are jockeying back and forth. Now, we've got window dressing coming up on Friday. That's the end of the month, the end of the second quarter, and money managers are going to be jockeying what they have in the portfolio so that when they do send out the statements, it's holding all the right things. That makes for really choppy space. Hey, listen, if you don't have to trade Friday, don't. I'm just saying. You really don't need to. All right, so let's take a look at the IWM. Today, I said, above 95.98 or at the bounce off of 95.23, we're going to be able to take a long, we're going to be able to take a long into, let's move that. Ooh, full gap fill. Nice. All right. We can take a long into 95.67, 95.84, and so on and so forth. 95.67 is the first target. This is an excellent space for us to have a little bit of a lesson. If I tell you above 95.98, here we are at 96.45 for the gap up. What do we know about gaps up? We have a partial gap fill. Listen, there are people that make a living, all they do is trade the gap, the fill or the fade. And that's all they do. So we know that gaps have a tendency to retrace. If you see a breakout level on a stock and something's supposed to go long and it gaps up into that level, please do not enter the trade. That's a fool's errand. Just saying. Okay? Not wise at all. Why? Because the gap will fill. And you're going to get either stopped out or get so negative that you're not going to be able to hold your trade. So notice I said at the pop of 95.23, which is all the way down here. Guess what? It doesn't even come close. It fills the gap though at that 95.65. That's one of our targets, right? If we have 95.65, it takes it in 95.67. We can take it long from there. It goes into 95.84, 95.98, 96.07, 96.38. That's our top target there. And I have one more, 96.88. Actually, I have a couple more as it expands. But if it gets up there into R2, guess what you don't need to do if it starts rejecting it? Yes, stay long. You don't want to do that, especially if the hourly 50 is there. So what are we going to look at for tomorrow? If IWM loses 95.94, it is going to be a short. It will also be a short if it loses 96.26 against the moving average right here, right? If it loses that 50 tomorrow, if it pops up and then loses the 50, it's also going to give us an aggressive short. Where are we going to come into? We're going to come into the prior days. We're probably going to come into 95.76 first, and then 95.65. So what do we want to do when we get to 95.76? We want to see the chart hold the negative price action, or else we could be getting out, or we should be getting out if this thing begins to pop, right? Other than that, it's going to continue down. That's the prior day's pivot. But this is the region that it's going to collide into. My thought, congestion event 95.22. Right? And then finally 94.69, because that is a weekly S1. And I think 94.67, and I think that's an important space. Now let's talk about it from the upside. If we breach 96.47 and continue forward, we are going to get to the top of this next gap, right? That's going to be about here. Nothing really stopping us from doing that once we get there. So that's going to be that 96.88 that I talked about. And once we do that, we're going to go into the weekly pivot of 97.26. Could we go further? Absolutely. There's the 200, 97.63. That's going to be the order of the day. All right, so we're going to watch that really carefully. Let's take a look at the Qs. Qs, the least gap fill of all, right? The least gap fill of all, but rejecting the resistance level 2 and not really testing that 50 simple moving average. It's just not doing it at all. Continued upside momentum looks like a possibility. What's the trade? Listen, this is very tight. So you want to wait for the loss of 70.58, right? 70.58, or if you want to be aggressive, you can take the loss of 70.95. And then you can trade that down to the gap fill, which is 70.44. And at the gap fill event, if you go through that, probably going to come into the next congestion level of 70. And then we're going to move into that 69.71, which is the weekly S1. Let's take a look at it from the upside. Above 71.04, or at the bounce off of, this one's kind of tough, right? That could be pretty sloppy. But above 70.77, we've got ourselves long action into what? I'd say it's all the way up here. Yeah, that's the prior day's resistance level 3, but real resistance is at 71.52. And then after that, the weekly pivot, 71.72. And then all of a sudden, we are sitting inside of the relationship between the 50 and the 200, and there's the top of the gap. That is going to be an important space at some juncture. The question is, are we going to be able to hold the lift we had today? Hard to say. Things look like we could, but you never know. So what do? You trade level to level, and you keep your wits about you. If you see things starting to roll over, get out of the trade, take your little bit of cash. This is not the place to be looking for the mother lode. They're not really here. Okay? So, good luck trading tomorrow.